start with the overview of the banking sector. From your vantage point as a global leader and the head of financial services at Oracle, what are the top 5 big trends as you see it now?
That's great. So I think, interestingly enough, banks being technology companies with banking licenses, the trends that we'll see with banks are quite, frankly, the trends that you see generally in technology. So I'll start with fundamentally the focus on the customer. With the advent of a lot of fintechs that came into being after the financial crisis that we had, the banking crisis in 2008, we saw a lot of fintech companies come around. They were born in the cloud. They use social technologies. They use the latest transformational frameworks. Use data really well, and they frankly made a big dent in the banking sector. And banks very quickly had to think about how to match the customer experience that they were providing. This actually got further exacerbated during the pandemic. We saw the number of digital customers grow by 3x. We saw the number of digital transactions go 6x. And customers were willing to jump from banks to other banks or other fintechs, depending upon the type of customer service they were receiving. So there's been an intense focus in modernizing the customer experience, in making sure that they bring the right product at the right time and the right service every time to their customers. So that's the first thing. The second thing we've seen is if you move from the retail or consumer banking sector to the corporate sector, that sector has not seen as much investment in what has been the digitizing of industries. It's still very paper-based and a lot of opportunities lost. So over the last 5-7 years, we've started seeing a tremendous amount of investment going into the corporate bank with front-to-back transformation in areas like corporate lending or liquidity and cash management, virtual account management. We've also seen payments go through a huge transformation in this space with new standards emerging, new real-time payment settlement mechanisms. So huge transformation happening on the corporate sector. I think some of the more profound changes that have happened are in the areas of regulation. Regulators are very much concerned about capital adequacy. Just last spring, you saw a number of bank failures happen, yes. Some large names.
Regional ones.
Yeah, the regional ones, and even banks like UBS as an example. So clearly the capital adequacy requirements are going to have gone up, and we are seeing banks self-impose on themselves new ways to stress test themselves, right? And so that has created a whole amount of scrutiny from regulators. So we expect that to continue to increase. An extension of that is actually cyber security. The number of cyber incidents that have happened over the last 3 to 5 years is exponentially higher than the period before that. So there's a tremendous amount of focus on cyber. And I think the last one I'll mention here is financial crime. If you really think about the amount of money that still gets laundered and escapes the dragnet of all the enforcement agencies, it's still somewhere between 2 to 5% of global GDP, which is sitting at $100 trillion. So despite all the best efforts, we are still seeing a ton of money that gets laundered away, and then it finds its way into terrible things like drug trafficking, illegal arms trafficking, human trafficking, terrorism. These are all the social evils that actually get funded by laundered money. So this is a tremendous amount of focus, both from a law enforcement perspective, but also from financial institutions that have the onus of preventing money laundering from happening.
So the first one is explosion of retail banking, digitization, playing catch up and providing the kind of customer experience that fintechs provide, catch up of corporate banking, compliance, regulation. The fourth one is cybersecurity. And the fifth one you outline is more on making sure there's no money laundering and there are adequate checks and balances that come in.
Can I just add to that? I think those are all business dimensions. Simultaneously, there's some fundamental changes like the move to cloud because people are trying to do more with less.
But is there hesitancy amongst the banks and financial services to move to cloud? Because you don't want your core banking, there are concerns surrounding privacy, there is a large capital outlay. So some time back, it appeared that the banking sector was lagging behind the rest of the industries in migrating to cloud.
I think that observation is accurate. I believe that you have to look at it from a spectrum perspective. So if you look at workloads like doing dev and test activity, those are moving to the cloud because there's very little concern from that standpoint. A lot of the back office applications, things like human capital management or finance management, is now moving to the cloud. And now we are starting to see many banks make the decision to actually go to the cloud for core parts of their operations, whether it's core banking or it's payments. So right now, I think there's still a lot of headroom on that piece. You know, I think we're only about 10, 12% of the journey, which is why we are very excited because we are out in the marketplace with some great cloud solutions.
So you would say 10, 12% of the banking universe today has migrated to cloud for their core banking services.
I think those are the estimates I've seen from analyst firms. You know, it's the general information on this is, you know, we are barely hitting double digits in that transformation journey because there's a lot of work that's happening, you know, in just trying to modernize the architecture. And by the way, this doesn't include just lifting and shifting your application. So you have an old legacy application, you lift it from your data center to a cloud data center. I think that doesn't really count as a cloud transformation. That's a lift and shift and outsourcing your infrastructure. What really means is, are you going to true SaaS applications that allow you the speed of transformation, that allow you progressive modernization?
So cloud-native applications. Also.
Exactly.
Okay. What about AI? All conversations today begin and end with AI. How is the banking industry using AI? And just beyond customer experience, personalization, the use of chatbots, etc.
If you really think about it, banks have been, and technology companies who support banks have been using AI. As an example, there's credit decisioning that uses a lot of AI models. I mentioned earlier financial crime. Financial crime has used AI models for a while because if you think about, you know, any type of transaction monitoring environment, it generates a very large number of alerts. About 90% of those alerts are actually false positives. So how do you reduce those false positive alerts so that you don't have to investigate them, because investigating an alert is a very expensive process. So traditional AI has been applied, you know, very traditional machine learning models. But now with generative AI, you mentioned a few of the cases, you know, better customer service, whether it's self-service through prompt engineering, or it is a better relationship management, better guidance to the agents that interface with either corporates or consumers, how to give them better information so that they can offer better products. All of that is happening with generative AI. Again, extending it to the financial crime example, I'll stay with that theme for a second. You know, the bad actors, the crooks, are getting smarter. They're using the same technology that banks are using, and they are finding ways around the thresholds that are being set. So generative AI is a great example where you can use adversarial agents to mimic money launderers and throw them at your controls and see if they can get past them. So people are creating these type of agents to start to test how effective the controls are. And we are providing some of these capabilities to our customers today.
But tell us broadly, what is Oracle's strategy when it comes to generative AI? Because it appears that OpenAI's ChatGPT or Google's Bard, they've dominated the narrative surrounding generative AI. So what is Oracle's strategy and the kind of investments that you're making?
So I think there's two ways to look at this, right? And I'll talk very specifically about Oracle's advantage in this regard. So the first thing is that a lot of these things you're talking about are horizontal technology. So it's like me bringing the internet to you and saying, here's the internet, go crazy, do what you want to with it. Well, you'll write the applications that allow you better customer service or manage your supply chain. That's just a platform play. But really what differentiates Oracle is we are the only hyperscaler that has, you know, very detailed industry applications that provide the operating technologies that customers use across all the industries. We provide horizontal applications. So we actually have a framework for providing ready-made use cases that use both traditional AI as well as generative AI out of the box to our customers. We don't necessarily take a platform, throw it over the wall and say, go crazy with Bard and do what you want to. Very large companies can do that. If you look at Jamie Dimon, who's the CEO of JP Morgan Chase, if you look at his letter to the shareholders, he says, I have 57,000 IT professionals. There's a bank, one bank has 57,000 IT professionals. How many companies can boast that? Yes. So if you have 57,000 IT professionals, you might be able to do something with that. But most of the customers, the broader segment of the market, they want ready-made use cases. Yes. They want solutions. And that's Oracle's advantage. The second Oracle advantage is that we actually, our Generation 2 cloud infrastructure is very unique. We have a very specialized networking capability called RDMA, which is remote direct memory access, that allows computers to exchange information in nanoseconds. And it allows us to cluster a very large number of GPUs together.
And you have some investment in a startup called Cohere also, right?
Yes, exactly. So we are partnering with Cohere as a large language model. You're well informed. But we are not dependent on just one. We are happy to work with any large language model because our customers will make that decision. Where we'll build something, we will choose which large language models to work with, but where our customers want to do something, we will work with them. In the AI world, we have two distinct advantages. One is this extremely fast generative AI capability, along with very deep knowledge of actual business cases that comes from our heritage in industry applications and in horizontal applications to bring that capability to our customers. So I think we are very uniquely positioned in this regard.
Is it too early to talk about how much generative AI can contribute to your top line?
I think that's early to talk about in the world. The way we look at it is, this is not a zero-sum game.
And it's packaged in with...
Well, it's packaged in, but I also think that the potential of generative AI is huge. We are just starting to scratch the surface in the industry. Not that long ago, people hadn't even made it a part of their vernacular. Now boards are asking about generative AI strategies of their technology groups, right? So I believe we are in the very early stages, and the potential is huge. And I think it's going to uplift all the capabilities that we provide today. We are going to be delivering very intelligent applications that provide recommendations, that create narratives where narratives are important, that provide guidance to customer agents. So all of this is early stages.
Sonny, I want to talk a little bit about Oracle Financial Services Limited. Now, Oracle Financial Services has been reporting muted numbers, a little bit of a sleepy company. The compounded sales growth over the last 5 years for OFSS was just 5%. And suddenly this quarter, we had blockbuster numbers, 26% revenue growth quarter on quarter, year on year, very strong margins, license sales shot through the roof. What happened? What changed for the company in this quarter? Should we just say it's a lumpy business? And what will be the sustainable growth for the company going ahead?
I think there are a number of things happening. We basically, if you look at the overall landscape, there are Gen 1 core banking systems out there, the FISs and the Fiservs of the world that have been in existence for the last 40, 50 years. Very old technologies. They lack a lot of talent even out there that can handle that. Then there were a series of Gen 2 companies that I would classify as Temenos and Finacle and so on and so forth. And then there's a whole new slew of cloud native companies, but the vast majority of them are small. We are one of the companies that is building cloud native applications. And this is a very fundamental shift. If I take you back to my original point of what these companies have to do, these banks have to do to compete with the born-in-cloud fintechs, is they have to fundamentally relook at their architecture. They have to find ways to introduce new products and services to the market very quickly, be more hyper-personalized to their end consumer. And they can't do that with the legacy. Each time they have to release a new product, it takes them a year to code around it because of the fact that they're mired in that old technology. Frankly, many of the techs that exist today didn't even exist when those old systems were written, right? Mobility didn't exist, social technologies didn't exist, IoT didn't exist, AI was just theoretical, right? So now these new companies are born that way, banks are competing, and they have to relook at their architecture. So now I'm going to come back to your question. So the reason why we are starting to see tremendous momentum is that we have invested very heavily in taking our vast breadth and depth of product portfolio to a cloud native framework, which means we've modernized the architecture, writing of the first line of code. This is not putting veneers around it and putting it on a third-party public cloud. These have been engineered for the cloud from the ground up. They're completely microservices based. They have user experiences that are modern. They are completely API based, so they can work in an ecosystem of products, which is also one of the areas where the regulators are going. And they basically are hyper scalable. I mean, very recently we won a deal in the United States, large bank with 12 million customers, about 160 billion in assets. They were using one of the older platforms, and they basically tested us to the limit in scalability. We were able to demonstrate benchmarks that were going into the 100,000 transactions per second, right? And 2,000 concurrent transactions per second. Again, a bit of technical jargon here, but this scale is important in this new world where more and more transactions go.
This shows Oracle's readiness. It takes two sides to close in a deal.
Yeah.
Right? So Oracle is all ready to provide next generation technology, and it's been tested, it's scalable, and everything that you said.
Yeah.
But on the other hand, you also need the companies, the banks, the financial services willing to make that investment, and you are competing with other players.
Yeah.
Right? You named Temenos, for instance. What is your market share? And again, getting back to the growth, have we reached that inflection point in the Indian financial sector or in the financial sector? Can we continue to see the kind of growth rates that we've seen in Q3 continue?
So I think growth is dependent on a number of things. There are always external factors, macroeconomic trends, and so on and so forth. So I think what you said is right. We are ready. We have the next generation of application. And frankly, we don't consider that Temenos is in that business, right? Temenos is definitely in the second generation of application. And the kind of companies that you see in this third generation, they're really small, right? They don't have the R&D. They can't invest in broadening their portfolio, reaching the customer base, adding AI capabilities from the ground up. As a company, we spend north of $7 billion in R&D every single year, right? So we take advantage of that R&D in building these capabilities. So I believe the growth will be determined by how the macroeconomic spend will happen. I believe that banks are now really aggressively addressing a progressive modernization agenda. So they're not willing to do a complete sweeping change of everything they've got. They'll take pieces of the puzzle and they'll continue to modernize, because that's what that's what their risk appetite is right now. And for that, you need a componentized architecture.
But you are seeing a switch in the acceptance of the banks, your clients, your customers,
100%.
compared to 6 or 8, 1 year ago.
I think maybe I would say compared to 2 years, 3 years ago, I think the pandemic was definitely a defining factor. They realized that it was time to change because the volumes were growing up and their existing infrastructure.
But yet in FY23, it's not that the revenue growth for the company was very high. It was about 9-10% on the top line.
Yeah, but you see, these deals don't necessarily happen and come to fruition in a month, right? When someone describes an intent, they have to build all the internal support for it. Boards have to be convinced, budget outlays have to be made, RFPs have to be floated. So my belief is that we'll see more and more of the banks, start to look at modernization agendas, and they'll do it in core banking, they'll do it in financial crime. We've had a series of wins in recent months.
Every now and then there is this rumor in the market about delisting of Oracle Financial Services. What is the thought process of the board on this point?
It's really not something we've discussed, to be very honest. We don't see the Do you see
merit in delisting the company?
Not really. I think the company has a large number of minority shareholders.
You're holding 72-73%.
Yeah,
as in the parent company.
The parent company has 73% roughly, and that's a matter of public record. And the rest of it is afloat in the market. And we think that we are well served with the current structure. So we haven't really had, I mean, I've been on the board for many years, roughly 10 years, and we've never really had to have that conversation with any intensity. So.
And what is the cash utilization strategy? Because the company generates a lot of free cash flow every single year.
Yeah.
In the past, you've done some buybacks, but every year you have a pretty hefty dividend that you give your shareholders. What is the cash utilization strategy, capital allocation strategy?
So I think, there are various ways where any company, utilizes cash. They do buybacks, they pay dividends, they do acquisitions, they do expansions. The nice thing about OFSS is it has a parent which is very strong operationally, and they have.
But do you have a dividend policy? How much you want to pay out every year?
We declare every year.
Every year you declare?
But yeah, in the last few years, you can see the record. We've been declaring very healthy dividends, and I attend the AGMs, and the shareholders are very, very happy. And so, when we find the right acquisition opportunities, we will do that. But the fact of the matter is, we can do that one of two ways. We can buy the company through Oracle. We can buy the company through OFSS. I mean, that's really our corporate strategy, which will come into play depending upon the circumstance. So we'll use the same capital allocation strategies that are traditional in this regard. Right now, we are very much focused on returning to shareholders through dividends.
And are you scouting for any acquisitions? I know it's always on the radar.
Yeah.
You will never turn away from an opportunity, but is there something on the table right now?
There always is something on the table, and we continue to stay focused on that because the opportunity to expand addressable market is there. And we look at a lot of inbounds, we look at some outbounds, but the fact of the matter is that, while money was very cheap, the valuations were quite extensive, and so we haven't really found really great cases where the value of the asset was well represented. So we'll see what the future brings.
Sonny, thank you very, very much for speaking to us.
It was my pleasure. Thank you for having me on.